Hey guys, what's going on? Jay Adams here, and I want to go over just really shortly on this quick video on how to potentially identify some entries on US 30 just by using a few simple things. Now, last Friday, you can see that the market had a move that wicked up to the high and then it continued to drop. And this is the hour time frame. If you were to go on the lower time frames, however, 15-minute or so time frames, you can see that it bought up right at the market open and then it continued downwards. To kind of get away from these fake outs at market open, what I want to do is have you guys understand the importance of higher time frame. So when we're going on this daily time frame, you can see that initially we had this drop that occurred right here. Okay, this drop that occurred right here, and then you can see the market pulled back up and it found some resistance all the way up in here. How do we know that it was resistance? Look at all of these wicks, wick, 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 wick. You can see there's a lot of consolidation inside of this area in which this candle right here broke that structure. So you can see we had a break of structure right there. Now let's progress down to the lower time frames and see exactly what happened since that break of structure after that huge shorts that happened here, pulled back. You can see it broke over here. Now this move, which is right here, okay, why did this go up and then go back down? How are we able to catch a couple hundred points on Friday, end of the week trading? You can see this market came down, continued to go down, and every single time it pulled back up, it continuously made lower highs or matched this high here. So when you see something like that, I want you guys to start looking at sharp turns in the market, in which you can see there was a sharp turn right here. Okay, I'm going to go back in time. I want to focus on this sharp turn in the market that turned down and it matched the support, what we call a 100% retracement down to this area here. Well, I noticed that there's a probe here and then you had this short happen. Well, that right in there tells me that there's a lot of imbalances still to be filled. Okay, you can see right in here, there's imbalances. This is a big supply area. If you notice the time, this would be Friday. So this is 4, 5, 6 a.m., 7 a.m., and you can see right at that market open. Okay, you have this on the 15-minute time frame. Right at the market open, I wanted to have a touch in the zone. Notice that price did not touch the zone. It came close, but it did not touch the zone. Consolidated. Okay, so you got to figure on the retail side, they see this as a potential reversal, and you have the stops above here. I want you guys to think in this manner. There's most likely stop losses above here. Okay, people are shorting right before the open, but it did not touch this zone yet. We were waiting for a touch of the zone. Okay, and what happens down to the 5-minute time frame is that you can see this is 9:25 and this was 9:30. So the market opens at 9:30 a.m. Eastern Standard Time. It probed into the zone, closed, and then you had this engulfing candle afterwards. This is what you call price action to confirm, okay, it touched the zone, it filled the imbalances. We had the false positive, collected stops, they grabbed the liquidity, and then they had the price action, the 5-minute engulfing candle, to give us the evidence in order to have enough confidence to short this market. And you can see the risk was, could have even been above this candle here, above the wick, whatever you would have preferred. And you can see this market on Friday went about in total of 300 points in a matter of, since execution, this market dropped and reached 300 points in a matter of about an hour and a half. So 1 hour and a 30 minutes time, the market dropped 300 points. Use this in your trading, guys. Understand where the highs are at, where you're at in the trend overall, higher time frame, break it down consistently, lower time frame, continuously go lower, hour, and then start using those lower time frames to identify your entries. Make sure to understand where your supply and demand is at, and that is how you can identify some potential entries on US 30. Much love, guys. Much appreciation. It's been Jay Adams here with this quick video on some tips and tricks to use for your trading. I hope it helps. Subscribe to the channel. Love y'all. We'll see you next time.